Good evening. Ira Epstein with your ETF Spider Stock Market Wrap-Up. And this wrap-up is for the evening of Monday, the 23rd of June, 2024. I want to go to a piece of news that has broken just in the past hour or so. Ceasefire announced between Iran and Israel by President Trump. Apparently, J.D. Vance said the president's been working the phone all day trying to get this to happen. And he announced that at midnight Eastern Time, the hostilities should stop. We'll see if that happens, but if it works, he gives them both courage for having stamina, courage, and the intelligence to end the fighting. We'll see. At some point, it will end. If, and this is a huge if the ability to make a nuclear weapon is gone, why is Israel attacking Iran any longer? Okay, they don't have to. They're never going to get the Iranians to like them, not this regime. Maybe the people will, but certainly not the regime. And I haven't seen in the streets, where's the demonstrations? I mean, this was the weak time, and now it's past. Now the opportunity's gone if there is a ceasefire between the two. This means that the Ayatollah retains his strength. His regime stays in. They didn't have to close the straits. The money keeps rolling in from China. And as much as the world will criticize the U.S. for what it did, we possibly took out the enrichment facilities. But I want to know where the 900 pounds of enriched uranium is, because this game's not over if that's on the loose somewhere. I write about all that tonight in my newsletter. The U.S. first quarter 2025 account deficit, 730. Then Redbook Group, retail sales coming out. Case-Shiller at 8 o'clock. We're going to get the 20 metro home prices for April. Then we're going to get the Richmond Fed to update at 9 o'clock in the morning, their monthly manufacturing sector index. At 9, you're going to get the consumer confidence index. That comes out. And at 9, we got Fed Chair Powell sitting before the U.S. House Financial Services Committee. It'll be all over the airwaves. I expect them to be attacked pretty good, so we'll see just what happens there. And then we'll get the API numbers coming out at 3:30. So, a couple of things happened today when we talk about the Fed. One of the things that did happen is another Fed member, that's 3 of them now, have come out that they're open to the idea of a July rate cut. That's big. Goolsbee now, Waller, and Michelle Bowman. So 3 have joined into that, coming on board that if the data stays as is, they think inflation has run its course. It doesn't have to break, but it can hang here, and the economy might need a nudge in order to keep things going. The idea here is I think all 3 are trying to get ahead of the curve. I don't know if that's right or wrong. The markets closed here. They didn't hear that news about Israel and Iran. So you're going to see some reaction to that in the morning. It was more than an interesting day because the market saw the firing. And then what the market did get a chance to see is that when the Qatar and Iraq bases of the U.S. were hit, it was telegraphed. It wasn't severe. It saved lives, according to President Trump. The U.S. was called, Qatar was called as the missiles before they came so that they can get crews and people away. Not one person was hit. In total, according to the president, 14 missiles were hit, the same amount of MOPS. Remember those ordnance bombs that we dropped? That's equal retaliation in the Iranian eyes. Whatever it is, forget the tomahawks and everything else that was fired. Who cares? Let this thing end. And the big question is, did the U.S. succeed in destroying these enrichment areas? I don't know, and neither do you. We're going to find out. Then we go into a lot more from there. Restoration Hardware, I covered it over the weekend, and as you can see, it's just laying down here trying to figure out what to do next. Obviously, if interest rates start falling, and ideally if mortgages fell back towards 6%, this company could come alive, but that hasn't happened. Don't know what you're going to do with all this. If you started with July cuts, once you get one cut, you're on the way for more cuts. Get rid of the idea that you're going back to a 3% mortgage. Hope you can get to 4.5%, 5% over time. That would be what I'd say. Lower highs, lower lows, still in a downtrend. The market is fighting a huge battle at the 18-day average to try to find its footing. And as you can see, it's caught in the Bollinger Bands in sideways action. When you put on momentum, the momentum is drifting sideways pretty much along with price. So the market is, for the moment, having a battle between it runs into the resistance at the upper band and support at the 18-day average of closes in red. In MP materials, today you had a good break finally, and you kept the embedded reading. I think the pros took their shot at nibbling today to see, was this the place to come in, and can the market get back up to the Bollinger Band? It's on a stilt, so it doesn't have to run, but normally the first break off a Bollinger Band when you're embedded is where the pros try to come in. In Broadcom, maybe we should go to Palantir one of these times, because this has just been going sideways. I do like the company, but it's sideways. Palantir is the one that's on fire, but it's moved so much that, I don't know that it's worth chasing up here. In any case, I'm bullish these longer term, lower highs, lower lows, but sideways action overall. Then in Google, came all the way down to the lower band. So just like it went to the upper black band here, you only stay over Bollinger Bands 5% of the time, or below them 5% of the time. You take a huge aggregate, and that's what the algorithms decide to do. It will adjust to price. It fell there, and the pros see that. So this is where I think short covering took place. The market is oversold. You've hit that number. You closed under the 100-day average on Friday. This was the next target if it could get there, and it did, and that's where I think the short covering came in. What Netflix keeps doing is coming up to the upper band and then slipping back. Can it break through it on the upside is the big question. You've hit my second goal. Remember, my first goal was 1,200. Then we were looking at 1,250. Is this thing on its way to 1,300 is the question. It is an overbought territory at the upper band, not embedded. This is where I think pros should take some money off the table. Robinhood just plain ran out of momentum when it didn't make it into the S&P 500 weeks ago. And yes, it has gone up, but it's not on fire any longer. Could be time that we look at something else. The next round where it can come in will be the interesting round that you want to own it ahead of time. Tesla, the fact that they have a handful of cars with drivers in them, and the cars drove themselves around, got the markets crazed. They're going, this is the next move for Tesla. Number one, they're far behind the other Waymos and some of the others that have been out there. I am not saying they can't run. Dan Ives of Wedbush is in love with the company. He thinks this is, I think, a $700 stock over time. Just wildly bullish. He was there and he thought it went very well. I don't know enough to tell you that or not. It was in a restricted zone of Austin that the cars went, which makes sense. It had a driver in the seat, which makes sense. This is their first go around, which makes sense that you put all the safety measures. Now you start looking at the data and you build on it. But if they get autonomous driving where they want it, there's a lot of Teslas out there that can hit the road. You know that. And they have the software. It just comes over the air into them. As you can see right here, you've got an embedded reading. So as much as you worry about what are the chip stocks doing, when the red line closes under 79, probably time to come out. Hasn't done it. It could still be going to the 234.5 zone. In the financials, they came to life once Michelle Bowman did her talking. All right, and I was just watching it going, darn it, all right. The market got to the 100-day average in the Bollinger Band, certainly a spot if you were bearish to short cover, but it went all the way up as the market just fed on itself with this. Now, we're going to hear the Fed chair tomorrow at the House Ways and Means Committee. You're going to have to listen to that for clues. I do, and I'll have it in my newsletter for the morning update with things that he said. You've got the higher high on XLI, the lower low, and look where you stopped. Again, the Bollinger Band. Are you getting the picture what these Bollinger Bands can do for you? Now, XLE, energy's probably going to get hit again when you reopen in the stock market. The futures are down again. You got lower highs, lower lows. What would hurt the market is if Israel and Iran can't reach peace tonight at midnight Eastern time. But if they get quiet, and if these two can stop the attacks, You're changing then the course of what's going on. And think of all the political dollars. You got to think of it that way, that President Trump gets for bombing. No other president's done that. And then getting these two to call an end to the 12-day fight. They're never going to be buddies, Israel and Iran. That isn't going to happen. But the regime change isn't happening either. People were not in the streets, and that's very important. And that moment's gone. Higher lows, higher highs. In order for gold to come down, you'd have to get and close under 309.13, which would be under the lows that you made on Friday, and be back under the 18-day average, and that could open the door up for lower prices. So you're at a very important area. Silver had lost its bullish embedded reading. Let me just show you. This is called embedded. It's when a market gets these numbers and they're just drifting sideways over 80. It's often accompanied by a rally. But when you lose it with the red line closing underneath 79, often that means price and the 18-day average are going to make a run at each other. They didn't today. I expect it to still happen. When we look at copper, you can see how it came down. Now hearing that interest rate talk should be beneficial. There's a squeeze play supposedly going on at the London Metal Exchange again. If you look at where the premiums are building on the front end, the London Metal Exchange just put in new rules last week. If you're a large trader, forcing you that you have to be able to make contracts available to other traders that are possibly caught short. Whole different thing. The squeeze looks to me like it's on. We saw this happen before in nickel and other markets. Be careful here. While you're not seeing it on American prices just yet in the miners, it's there in the cash market, and you want to keep your eye on it. In BND, higher lows, higher highs. Look at the higher you go, it's lower interest rates. That doesn't look bearish anymore. It is overbought, but we'll see what it can do. The dollar couldn't even get up to the upper Bollinger Band, and look at this huge day. To tell me this market's got more than just a bounce in it, you've got to go back through today's highs. Barring that, I could make an argument for the lower Bollinger Band in quick order. And in the euro, obviously bullish and coming right up. It's challenging the upper Bollinger Band. You hit a high of 106.89. You're just knocking on the door of where that market is at this point in time. So you put it together, you get a game plan, you try to follow it. And there's times when you sit back. I can tell you, I had today in the SPDR ETF, I had my clients buying some more. We got stopped out of metals on Friday. I was wrong. I was losing 80 cents. I'll take that 14 cents on another trade. That's the way I want to lose. It's not always that way, but sometimes you can get the job done. A lot of what I teach and practice is all included in the futures trading kit we've put together. Chart patterns, you see me talking about them here, they're there. How often do you see me talk about pivot points and how the pros use them, especially on days that are super volatile like today? Cause and effect. I wrote this when Paul Volcker was Fed chair. Put this whole thing together at that point. I forgot I was using a bunch of different sources. I don't write it all. It went out there. It's as good today as the day I put it together. Just go to IraEpstein.com, free offers on the top left. You'll see up here icons, give them a click, and away you go. I'm Ira. Thanks for watching. I'll catch up with you in the other videos tonight if you want to watch those, and I hope you do. And first thing in the morning when I put out my morning flash update. Take care.